What's up, Internet? It's your boy, Todd Snow. Imagine paying off your 30-year mortgage in 5 to 7 years. Now, before you dismiss this video and go watch some guy build a deck because you think this is something only rich people can do, just take a second and hear me out. Because I'm going to outline a very simple but very difficult plan that is designed to destroy your mortgage. And this is good for no matter what financial situation you're in. I promise you, this can work for you. But before we kick this off, I'm going to get real. I'm going to keep it 100 and I'm going to keep it gangster. This is not a scam. This is not some quick fix plan. I'm not trying to sell you anything. This is a time-tested, legit, proven strategy that can get you out of financial prison and can lead you to the promised land of financial independence. That is, if you can stay locked in long enough to make it work. But with that in mind, I am not a financial advisor. I am not your financial advisor. I'm just some random guy on the internet. But just in case you didn't know, I am a licensed real estate agent in the state of New York. Me and my team have been helping people in the Hudson Valley for over 20 years. So if you are looking to buy, sell, or invest in the area, go ahead and hit me up at toddsnow@kw.com. Links down in the description below. Let's get into the video. Alright, so I appreciate you sticking around to hear me out. But now it's time to take the gloves off and have a hard conversation. This is just me and you talking. So what I'm about to tell you will either excite you or strike fear into your heart. But either way, I hope it opens your eyes to the truth. And the simple truth is that the 30-year mortgage is not designed to help a homeowner. I hate to break it to you, especially like this, but you might be getting dittied. See, a mortgage is built to pad the bank's bottom line and make you pay hundreds of thousands of dollars in interest. You know, and the saddest part is that most people never question it. They just show up with the baby oil in hand and sign on the dotted line because that's what you do. And that's exactly what the banks want you to do. Let's take a look at some numbers so you can see what I'm talking about. All right, just to keep things simple, let's say you buy a home, $500,000, 10% down at 6.5% interest. It's roughly a down payment of $50,000, and of course that's not including homeowner insurance, property taxes. But you're going to get a monthly payment of about $28.50, which isn't that bad. It seems very affordable. But here's what the banks aren't telling you. Over the span of the 30-year loan, you're going to end up paying over $1 million for that house. That's more than twice the value of the home itself. And that's over $500,000 just in interest. That's $500,000 just for the privilege of borrowing $450,000. Ouch. And we haven't even added in the property taxes and the home insurance and other costs that I was telling you about. And most people go along with it because they're never told that there's a better way. And I promise you, there is a better way. But like I said in the intro, it's not going to be easy. Most people are never even told that they had a chance to keep the $500,000. And think about it. Imagine what you could do with that money. Imagine what $500,000 could do for you and your loved ones. Think about what it could do for your lifestyle. That money could fund your kids' college, could fund your retirement. That amount of money could be used to build generational wealth, but instead, it ends up going to the bank. But if you have the discipline, it could be yours. Now it's about this point in my speech where most people start to get skeptical and lose interest because they say, Todd, I know what you're going to say. You want me to make extra payments. And you're not wrong. I do want you to make extra payments. And they always say, I'm barely making ends meet as it is. They say, I got car payments, I got credit cards, I got student loans, kids' cell phone bills, and whatever else you need to pay for to live. But again, I'm going to keep it 100 with you. Here's the hard truth that most people don't want to accept. And I'm not going to sugarcoat it. Out of respect, I'm going to say it straight. So, If you can't afford to pay extra on your mortgage, you probably can't afford the house. Probably means you're living beyond your means, and it's time to make some changes immediately. Because staying in debt for 30 years is not a plan, it's a prison sentence. But for those of you who are willing to make a little sacrifice, for those of you who are willing to get serious about wealth building, you need to hear me out. You must be willing to live different than everyone else so that you can live better than everyone else. Trust me, this strategy will set you free. Alright, so if you stuck around this long, you're probably a little bit interested, but you might still be having some doubts. You might be wondering, Todd, is it actually worth it? And I'm going to give you a couple of good reasons why it absolutely is. Because for one, you get to keep the $500,000 that you would have paid in interest. And that's real money. Think about what you could do with $500,000. In addition to that, you're going to be eliminating your biggest monthly expense once your house is paid off. No more paying the bank. Trust me, your life will fundamentally change when you don't have a mortgage hanging over your head. And with that, you're going to gain peace of mind that most people will never get a chance to experience. Once you pay it off, you own it, free and clear. No one can take it from you. Doesn't matter if the economy crashes, doesn't matter if you get laid off, doesn't matter what happens, you can't get evicted. You own the house. And trust me, you cannot put a dollar amount on that type of security. Plus, you're going to open yourself up to all kinds of opportunities that are closed to people with debt. When you have no mortgage, you can quit your job. Imagine that. You might even be able to get a lower paying job that you actually like. I mean, you can go start your own business without the pressure of the largest bill you have paid in your lifetime hanging over your head. And believe me, you could probably even retire early. How's that sound? I think one of the most important things if you're here trying to learn about building wealth is that this will help you at an accelerated pace. With no mortgage, that money can go into investments. If you took the $28,500 that you're paying on that $500,000 house and you invested it for 20 years at a 10% ROI, which is average for the stock market, it's over $2 million. How's that going to fund your retirement? But listen, go do the math for yourself. Don't take my word for it. I'm just some guy on the internet. All right, so if that's not enough of a reason for you, go ahead and click off this video and go watch the guy build the deck. But if you're stuck around, let's talk a little bit of strategy. And again, remember, I'm not a financial advisor, just some guy on the internet. Don't take advice from some random guy on the internet. Go find a professional to help you out. So I talked earlier about making extra payments. That's one way to do it. You can make 13 payments a year. You can knock about 5 to 7 years off that mortgage. You can also start making your payments bi-weekly. That'll knock a couple of years off. You're still paying the same $28,500. You're just splitting it up into bi-monthly payments. Just make sure you talk to your mortgage owner and make sure that you're paying into your principal as fast as possible. The second thing you're going to have to do, if you really, really want to get that thing down, is you're going to have to reduce your cost of living. I know this hurts, but if you can do this, it'll put you ahead of so many of your friends and neighbors. I've had plenty of conversations with people, and they say, I'm paycheck to paycheck. How am I going to come up with an extra $1,000 a month? And for this one, you're going to have to dig deep. You're going to have some hard conversations. You're going to have to ask yourself, do we need to be a 2-car family? Or can we go for a few years with just one? Do you need Starbucks? Do you need to have takeout for lunch? Do you really need Netflix, Hulu, Disney Plus, Amazon Plus, and every other Plus streaming service that you're subscribed to? Trust me, the more you can find to cut your budget and pay towards the principal, the more you're going to get back in those interest payments. And the faster you're going to be free from the largest payment you make a month. And that's the secret sauce to getting it paid off in 5 to 7 years.